end. Let me also welcome on board Chandan Taparia. Chandan, hi, good morning. Chandan, global weakness and already the GIFT Nifty is indicating quite a bit of gap down start. What kind of a trade do you now foresee for both the Nifty as well as the Nifty Bank, which is weaker than the index?
Good morning. Thanks for having me. So yes, the trend of the market is negative on the medium term point of view, and the index has been making lower top, lower bottom from last 6-7 weeks. We have noticed that even the bounces are being sold. In the last week, the index witnessed a recovery towards 23,350 marks and then corrected towards 23,100 on Friday. Even on Wednesday, it witnessed a recovery towards 23,850, and then again the bounces were sold. So selling pressure is clearly visible on every small bounce, and the structure of the market is negative as of now. So we believe that till Nifty holds below 23,333, bounce could be sold for the downside move towards 22,500, 22,200 levels. If I look at the data setup, India VIX is near 22 marks, which clearly indicate that weakness could continue. And the greed and fear indicating is giving more about the fear in the market. FI's long short ratio is at 14%. FIs are continuously selling, and two key asset class, crude and dollar, are getting strength, and that is also putting the pressure on the market. So till it remains below 23,333 in the Nifty, we are looking for a downside move towards 22,500, 22,200. Talking about Bank Nifty, which has been underperforming in this month, the Nifty is down by 8%, but Bank Nifty is down by more than 12%. Here also we believe that till it remains below 54,250, it can go down towards 52,500 to 52,000. So in both indices, sell on bounce could continue and weakness could persist as of now as per the weekly chart setup.
Interesting. And Chandan, hi, very good morning. Give us a sense with regard to how one should have a tilt or how one should play the market at this point. Are there some sectors which are actually looking good? Is there a sector tilt? Is there a stock tilt? How should one play it?
Yeah, so good morning. Very interesting question. First, an important part is we have to be with the trend. And in the falling market, we need to keep a couple of things in mind. First, being in case is also a trade in the market. So better to keep the trade less, focus on the position sizing. Don't do the averaging in the losing counter. Try to look at the stocks which are having the relative strength. So if I look at the few sector and stocks which are comparatively falling less at the time of market corrective move, we'll focus on those names. So I believe a couple of metal, power and energy name could be in focus. So I believe counter like Coal India can do well. Major trend is positive. This sector is doing well. In fact, after the corrective move of last week, the counter has managed to hold the higher base near 450 with some put writing. So Coal India could be one counter where we will continue to be with buy on decline instance. Any decline towards 460 could be bought with support of 450, and it can head towards 480 kind of level. Jindal still could be one other name. And if I look at the entire derivatives data setup for the stock future, this is the strongest counter in terms of put call ratio. It is having 1.27 put call ratio, where most of the counter are witnessing call writing. So here I believe some support based buying could be there near 1130. So here one can go with buy on decline with support of 1130 for an upside target towards 1240 kind of level. So selective metal, power, coal counters could be in focus in this market scenario, while most of the other sectors are showing sign of the weakness, whether we talk about the auto, financials, banking, metal and all.
Okay. Any very quickly, Chandan, any stock specific calls that you have? Any shots that you've initiated at all, stock specific at this point?
Yeah, so negative bias on Indigo, one of the weak counter, has been making lower top, lower bottom on the weekly and the monthly chart. I believe a small negative opening could give the fresh decline of 4 to 5% in the counter. So one can sell with hurdle of 40 to 50 for a downside target towards 3,900 levels. And I think this is one of the weakest counter. We are continue to remain weak on IT name. And I believe Coforge is one counter which can decline further with hurdle of 1110. It can go down towards 1,040. So IT in Coforge and Indigo are two weakest structure which can correct by 3 to 5% further.
Okay, great perspective. Let's take a step back. Let's get a perspective on all that's playing out. And commodities remain on edge. Brent crude is hovering near the $112 a barrel mark amid the Hormuz tensions, keeping energy markets tight. LNG supplies are disrupted even as US gas sees local oversupply. Meanwhile, gold and silver are sliding as inflation fears delay rate cuts. Now, Trump says he is not interested in a ceasefire with Iran, even as he signals the possibility of winding down military operations. Speaking to reporters, Trump said the US is very close to meeting its objectives while maintaining that now is not the time for a ceasefire. War effects spiral into other nations as well. UK Prime Minister Keir Starmer has called for an emergency meeting to assess the economic fallout from the escalating Iran conflict. Meanwhile, Pakistan has restricted large sporting events to conserve fuel, while Sri Lanka has hiked fuel prices sharply for the second time in a week. Now, India is beginning to see relief on the energy supply front amid the conflict. An LPG carrier has arrived at the new Mangalore port carrying over 16,000 tons of cooking gas, with more shipments lined up over the coming days. A Russian crude vessel, Aqua Titan, has also been rerouted to India after changing course mid-journey from China. And K-pop supergroup BTS has made a high-profile comeback, performing their first concert in over 3 years at a historic square in Seoul. Over 100,000 fans turned up for the free concert, which marked the group's return after military service alongside a new album that sold nearly 4 million copies on day one. The show was streamed globally across 190 countries. Okay, Chandan, we did take your, your tilt or your stock bias. Give us a sense of what to make of HDFC Bank.
First, we need to look at the Bank Nifty, which started to underperform. If I look at the entire FY25 or calendar year 25, Bank Nifty outperformed the Nifty and so many other indices. Bank Nifty was up by 18% compared to the movement of 11 to 13% in the Nifty in the last year. But now the Bank Nifty is comparatively declining more with some weakness. And I think the geopolitical concern are the key reason. In fact, in this month, the Bank Nifty is down by 12% versus the decline of Nifty by 8%. If I look at the HDFC Bank, the structure is negative. It has been making lower top, lower bottom. In fact, down by more than 12% in this month. And in fact, the lower top, lower bottom is happening from last 4 months. We have seen long unwinding with fresh call writing. As of now, the structure is weak. However, already we have seen a massive correction in the counter. But I believe 730 to 720 can provide some support-based buying with the view that some put writing is visible at 700 strike in the counter.
Interesting. Okay. So that's the take with regard to an HDFC Bank. But the big brokerage call of this morning is Interglobe Aviation. It's in focus as Goldman Sachs maintains its buy rating but cuts the target price. We also had a Morgan Stanley note. But what Goldman is really citing is sharply higher fuel costs and the weakness in West Asia in terms of the traffic impacting near-term outlook. Let's go across to Sneha. She's here with the highlights from that note.
Well, yes, so today in focus is Interglobe Aviation on the back of a Goldman Sachs note wherein they continue to buy to maintain their buy rating on the stock, but they have cut the target price to 5,200 rupees now from 6,000 rupees earlier. This target price cut still reflects about a 27% upside to where the stock is right now, compared to that 6,000 target price earlier that reflected a 46% upside from where the stock is trading right now. They've cited Middle East traffic weakness as one of the big reasons that is going to be impacting near-term outlook for this. On the back of that, they have cut the FY26, FY27 and FY28 estimates for the company. And in terms of EBITDA, they're now baking in 13,700 crore rupees of EBITDA now for FY26 compared to 18,300 earlier. For FY27, this number is 15,900 compared to 25,800 crores of EBITDA earlier. And for FY28, the new EBITDA baked in is 24,400 crores compared to 29,200 crores in EBITDA earlier. So moderation in their outlook in terms of the EBITDA as well. And on the back of that, they have cut their target price too. On the flip side, the positive that they're flagging off is Interglobe Aviation's net cash position, which the brokerage firm believes is its biggest strength against its peers, which means that when amid tough conditions, most other airline operators are likely to concede market share to Interglobe Aviation, and that could be the only positive factor of this entire fuel price hike that could work in Indigo's favor. So that's the positive that Goldman Sachs is flagging off, but they're also saying that in the near term, with oil prices remaining volatile and near term's earnings outlook weakening meaningfully, they are baking in no profit for Interglobe Aviation for FY27, and they also note that the stock may continue to remain volatile. So that's Goldman Sachs note on Interglobe Aviation, continue to maintain buy, but have trimmed the target price to 5,200 rupees per share now.
Thanks, Sneh, for that. So, no profit for Interglobe in FY27. That means that what many of the brokerages are penciling in with respect to earnings downgrade coming in for FY27 is coming into play as we speak.
Yeah, I mean, global traffic not playing out around 20% lower is what is the kind of impact on global traffic. Chandan, you're obviously negative with regard to Interglobe, but the other one which will likely be in focus today is L&T, and we've spoken about this at length over the course of the show. But Chandan, we don't have your view with regard to an L&T. Over the last month or so, L&T is the top loser on the Nifty 50 index, 22% down. Mind you, that stock over the last 1 month. How's it looking like now on charts at 3,400? And we're seeing maybe another percent shaved off in trade today. At least early minutes seem to indicate that. What's the sense?
Yeah, so in the last month, the counter headed towards 44, 40 marks. But again, the failure breakout was clearly visible as the stock started to form the lower top, lower bottom on the weekly chart. It had seen a correction from 44, 40 to 3,400 level. It has been consolidating from last 4-5 trading session, but I believe now fresh breakdown can take the counter to lower levels. We have seen built up of short position with sustained call writing. In fact, the put unwinding is also visible in the counter. So the structure could remain weak till it doesn't surpass 3,600 marks. The immediate structure can take the counter towards 3,000, 3,100 kind of level. So looking for further 300 to 400 points decline in the counter as of now. However, it would be tough to comment where the counter can bottom out. But if I believe in the same segment, counter like Cummins and ABB could do well in capital goods, while L&T could under pressure as of now.